Ever found yourself a little short on cash before payday, wondering if there's a quick, ethical way to bridge the gap? Maybe you've heard of Beforepay, an app designed to give you early access to your wages. But then a crucial question pops into your mind: what's the minimum amount you can actually get? It's a common query, and understanding this, along with how your limits are determined, is key to knowing if Beforepay is the right tool for your financial needs. Beforepay operates on a simple premise. It allows eligible users to cash out a portion of their upcoming salary before their official payday. This isn't a traditional loan in the sense of accruing interest, but rather a pay advance service. They charge a flat 5% fee on the amount you advance, and that's it. No interest, no late fees, no hidden charges. This transparency is a big part of their appeal, offering a more ethical alternative to some of the high-cost payday loans out there. So, let's get straight to the minimum. While Beforepay offers a maximum cash-out limit of up to $2,000 for established users, for new customers, the initial limit can be much lower. The minimum amount you can cash out with Beforepay is $50. This means if you just need a small top-up to cover an unexpected expense, Beforepay can potentially step in with as little as a $50 advance. This lower entry point makes it accessible for a wider range of immediate, smaller financial needs. Now, how do they determine your specific limit, and why might it start at $50 for some and be higher for others? Beforepay uses a sophisticated assessment model, not a traditional credit check that impacts your credit score. Instead, they analyze several factors to determine your eligibility and set your unique cash-out limit. These factors include: firstly, your income. You need to be earning at least $300 after tax each week with a regular pay schedule, weekly, fortnightly, or monthly, and have your salary directly deposited into the bank account linked to Beforepay. They won't consider self-employment income or primarily government benefits, though Centrelink can make up to 50% of your income. Fluctuations in your income can also affect your limit. Secondly, your debts. If you have a significant amount of debt from various sources, including other buy now pay later services, this can influence your limit. Beforepay aims to promote responsible spending, and high debt levels can signal a higher risk. Thirdly, your spending behavior. Beforepay's system looks for what they call risky spending behaviors, such as frequent gambling. While they empower you to spend your money as you see fit, patterns that suggest financial instability may lead to a lower limit. They want to ensure you can comfortably repay the advance. Finally, your account history with Beforepay. This is crucial for increasing your limit over time. Consistently repaying your advances on time demonstrates positive financial behavior, and as you build a good repayment history with Beforepay, your cash-out limit can gradually increase, potentially up to that $2,000 maximum. Conversely, missing repayments can negatively impact your limit. It's important to remember that your limit is recalculated each time you go to cash out, ensuring it's appropriate for your current financial situation. This dynamic assessment means your limit isn't static and can change based on your financial activity. So, while the minimum cash-out amount for Beforepay is $50, your journey with the service can see that limit grow as you establish a positive repayment history and demonstrate responsible financial management. It's a tool designed for short-term financial flexibility, offering a quick way to access funds when you need them, without the complexities and often higher costs of traditional lending options. With that said, thanks for watching, and until next time.